Today is the fourth session where we are going to discuss some more numericals, and from that numericals we are going to understand some more concepts. Okay, so this session and these the series of the sessions most important from the exam point of view. So just maintain the notes as well, whatever I am just conveying here. Okay, so let's start the session. So first question is we have to just find out the cost of the goods sold of any firm. So opening stock is given here, that is 50,000, and purchases are given, that is 80,000. Sales are given 1,50,000 rupees. Closing stock is given 5,000 rupees. Wages paid it is 3,000 rupees, and freight paid on the purchase is 2,000 rupees. So we have to just find out the cost of goods sold of a firm. So look, for solving this type of question, first understand about cost of goods sold. So cost of goods sold actually refers to cost of sales. It actually refers to cost of sales, or say cost of revenue from operation, or say cost of revenue from operations. So whenever you just find a questions related to a cost of goods sold, then you always just rememberize that is cost of goods sold actually refers to the cost of sales, or say cost of revenue from operations. So this basically the direct cost of producing the goods and that sold by the company. Okay, and direct cost include like cost of material, labor charges, etc. Okay, so that would also include it, that is a direct cost, and direct cost may be a cost of material, labor charges, etc. Okay, and this is basically that the cost that is directly used to create and producing the goods. So in short, if I say that is cost of goods sold, you always have to remember that is the formula of the cost of goods sold. That is cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. You always have to memorize this formula for calculating cost of goods sold. All right. So now just we have to if find out what will be the cost of goods sold here. So we know that before purchasing there always be a some stock, or say there may be a some stocks available in firm already. So that would called as a opening stock. And if I'm just saying the closing stock, that related to the after sales. After sales, the remaining stocks termed as a closing stock. Okay. So if we have to just find out the cost of goods sold, so how we can just evaluate cost of goods sold? Like you have to put all the values in that formula. Okay. So if I say we have to just find out the cost of goods sold here, so what we have to do? We have to write here cost of goods sold is equal to opening stock of a firm, that is 50,000 rupees, plus purchases, that is 80,000 rupees. After that, we have to find out the direct expense related to producing the goods. So wages paid is given here, that is 3,000. So we have to just add here 3,000. After that, freight paid on the purchase is also given as a 2,000 rupees, and that would also related to a direct expenses for producing the good. Okay. After that, we have to just subtract the closing stock. So closing stock is given here, that is 5,000. So we have to just subtract here, and we have to just find out what will be the cost of goods sold here. So just sum up all these and just subtract the 5,000 from this, and you will get the answer here. That is 130. That is 5 and 5, that would be cancelled. So that would be a 1,30,000 rupees would be the cost of goods sold here. All right, so that's how we calculate our cost of goods sold here. So you always have to just remember, whenever you have to just find out the cost of goods sold, you have to just consider the opening stock first. After that, purchases. After that, all the direct expenses. all the direct expenses associated with the product, producing the product, minus closing the minus closing stock. So you always have to remember this formula while calculating cost of goods sold. And in JIB examination, you will get these type of the questions. Okay, so like opening stock is given, purchases is given, and the direct expenses are given, and closing stock is given. You have to just find out the cost of goods sold from the given data. Okay, so here cost of goods sold will be the 1,30,000 rupees. So that would be the answer of this question. All right. After that, just attend another question, and this question is same as the previous one. Just a difference, that is here you have to just find out the what is the gross profit, or say what will be the gross loss of a firm. So you have to just find out the gross profit or say loss of the firm. Okay. So what I told you, that is the gross profit or say formula of a gross profit, that equal to the sales minus cost of goods sold, isn't it? I told you that is formula for gross profit, that is a sales minus cost of goods sold. So it is whenever the sales would be higher than the cost of goods sold, it is considered as a gross profit, and whenever cost of goods sold will be the higher than the sales, it will be considered as a gross loss. Okay, so this is very obvious thing to understand. So whenever sales will be the higher, that means the company is in the profit, that means it will consider as a gross profit. And whenever the cost of goods sold is higher than the sales, then it will consider as a gross loss of a firm. So like first we have to, if we have to just find out the what will be the gross profit or loss of a firm here, so we have to first find out, because sales are given here, that is sales are 1,50,000. So just put here sales 1,50,000 rupees, and now you have to just find out the cost of goods sold, like we had done in the previous question. So you have to just find out the cost of goods sold here. All right. So cost of goods sold here, like we had done in the previous question, opening stock plus purchases plus direct expenses associated with the producing of the goods. So direct expenses like wages paid it here, that is 3,000. Freight paid on the purchases is like a carriage inward. Okay, so that will be a 2,000 rupees, and minus the closing stock, so that would be a 5,000 rupees. When you just solve this cost of goods sold, you will get here 1,30,000 rupees, and you have to just put the values in this formula, and you will get the answer 1,50,000 rupees minus 1,30,000 rupees, and that would be equal to the 20,000 rupees. So that would be a gross profit of a firm. Okay, so just suppose if I say that is cost of goods sold here, or say if I say that is sales are given here, that is 1 lakh rupees. So sales are given 1 lakh rupees, and cost of goods sold is 1,30,000 rupees. That means firm is in a loss, and that would be considered as a gross loss of a firm. But here, because sales are higher than the cost of goods sold, so it would be considered as a gross profit of a firm. Okay, so the answer of this question will be the gross profit of a firm, that would be a 20,000 rupees. So that would be the answer here. Okay. So if you have not just download the Adda 247 application, so just download this, and subscribe the Officers Adda 247 YouTube channel, so that you can get notifications of the live lectures and important lectures, and you can get important notifications, important news related to the examination. So just download the Adda 247 application and subscribe the Officers Adda 247 YouTube channel. Also, one quick update from our side, that is we are just going to start a foundation batch, and that batch is going to start from 7th February 2022, and this batch is for English medium aspirants. Okay, in this batch you are just going to understand everything from zero level to advanced level, or say that all thing that related to most important from exam point of view. In this batch you are just going to get mock test, ebooks, as well as a live session related to all the chapters. Okay, and this is also at very convenient price. That means you only have to pay 22% of the package. That means you are just going to avail 78% discount on the entire package of this batch. So just use code Y422 and you can just avail a 78% discount on this batch. Okay. So use the code Y422 and just avail a 78% discount on the product. Now understand another question, and this question is about inventory turnover ratio, and this question is very important from the exam point of view. So in ratio analysis, I already told you that you do not need to memorize all the ratio formula. You only have to understand how you can derive best by its ratio name. So understand all these things now. So first understand what we just going to understand turnover, what the turnover means. That is, turnover basically indicates the speed at which activities of business performed. So that is basically a turnover, or say how quickly a business conduct its operations. So that is known as a turnover. So how quickly a business conduct its operation, that is known as a turnover. Okay. So if we have to just derive the formula for the inventory turnover ratio, so we know that turnover, that is basically we derive turnover of any company by its sales. Okay, so it is not necessary that every item is in our factory. Suppose that this is our factory, so it is not necessary that every item in our factory that is for the sale is going to purchase by the buyers. It is not necessary that every item that is in our factory and that is in our factory for the sale purpose, and this is not necessary that every item is going to be purchased by the buyers. So we should write here cost of goods sold instead of the sales. So we should write here cost of goods sold instead of sales. While if I'm talking about the inventory, so inventory related to a stocks of the firm. Okay, if I'm just talking about the inventory, so that is related to our stocks. Okay, and in case of the stocks, before purchasing new stock, there may be already some stocks available in our factory, so that it will be known as a opening stock. Before purchasing available stocks for the sale, that is known as a opening stock, and after purchases, if sale is done, so the remaining stocks known as a closing stock of a firm. Okay, so we can see here that is in terms of the stock, we just going to talk about the opening stock as well as the closing stock. So while we considering the stocks, we always write here that is average stocks. Okay, so average stocks, that would be equal to the opening stock plus closing stock divided by the 2. All right. So while considering inventory turnover ratio, that would be equal to our turnover, that you always have to memorize by this method, like this way, that is turnover related to our sales, and not every item that is sold by the firm. So we just consider here that is cost of goods sold and inventory related to our stocks, and stocks are of opening stock as well as the closing stock. So we are just going to consider here that is average stocks. Okay, so if we have to just find out the cost of goods sold, we know that how we can just derive the cost of goods sold. So look, we have to just sum up the opening stock plus purchases plus direct expenses. So that all would be sum up and minus the closing stock. So that's how we calculate the cost of goods sold. So if we have to just find out the cost of goods sold here, so we have to just put here that is 18,000 rupees plus purchases, that is of 46,000 rupees, plus direct expenses, wages related to our labor charges. Okay, wages related to our labor charges, while salary related to our employees. Both are different. Okay. So as I discussed in my lecture, so wages here, that related to our labor charges, and so we just have to sum up here, that is wages, that is of 14,000 rupees, plus carriage inward, that is 4,000 rupees, and minus, that is 20,000 rupees, 22,000 rupees. Okay, so just calculate this and you will get the answer. Just calculate this, you will just get the cost of goods sold, that will be equal to the 60,000 rupees. All right, and if we have to just find out the average stocks, so average stocks would be opening stock plus closing stock divide by the 2, so that would be 18,000 plus 22,000 divide by the 2. So just solve this and you will get the 20,000 rupees average stocks. Okay, so if we have to just find out the inventory turnover ratio, how we have to just put the values in this formula. So cost of goods sold is 60,000 rupees, while average stocks, that is 20,000 rupees, and you get 3:1. That would be the inventory turnover ratio, or you can also say that that will be a 3 times. Okay, whatever you just whatever the option is given in the exam, you have to just consider that. Okay, so this is how we calculate a inventory turnover ratio. Like, we have to just understand by ratio name. Okay, we have to just derive the formula by its ratio name. So if I say that is turnover related to our sales, and not every item that is sold by the firm, or say that is purchased by the buyers, not every item, so we just consider the value of the cost of goods sold. And inventory related to our stocks, so we just consider the average stocks here. So look how simple we can derive the ratios of any parameters. Okay, so this is how we calculate this. Now understand another question, that is when the cost of goods sold exceeds sale, it is known as. Now just tell me the answer of this question, because I already discussed this. Like, when the cost of goods sold exceeds sale, it is known as. Tell me the answer of this. Look, if I say what is the formula of a gross profit, or say gross loss, what I told, that is gross profit or say gross loss is equal to our sales or say net sales minus our cost of goods sold. Okay, so what I told, that is, if sales would be higher than the cost of goods sold, that would be considered as a gross profit. Okay, and this is very obvious. So, and if the cost of goods sold exceeded the say sales of the firm, then it will be considered as a gross loss of a firm. So in this question, the question is, when the cost of goods sold exceeds sales, it is known as. So the answer would be here, that would be answer gross loss. Okay, so that would be considered as a gross loss. So whenever the cost of goods sold exceeds the sale, it is known as a gross loss of a company. Okay, and if suppose that in opposite of this, if the question will be the when the cost of goods sold lower than the sales, then it is known as a gross profit of the firm, or say gross profit of an organization. Okay. Okay, so that's all for this session. I hope this session will be very useful for you guys. So if you have not joined us on a Telegram channel, you can just join us on a Telegram channel. And thanks for watching this video. If you just like our content, please do not forget to hit the like button and subscribe the channel also. And please share this video to your friends if you just liking our content here. So thanks for watching this video.